Welcome back to another video. Today I want to talk about SoFi Technologies. Their stock dropped by around 6% here today and then another 1% after hours, down to a share price of $27.49. And there's a reason for all of this drop that we're going to get into in this video. I also want to talk about what the company is setting up for in the future, because I think that's very important when considering why they made the move that sent the stock down by over 6% in a single day. And that move was the company announced that they are going to be selling around $1.5 billion of shares, with the option of selling an additional 15%. And here's how this actually breaks down. So they are selling around 54.5 million shares at a price of $27.50. So this number should be very familiar, because after hours Friday, the stock price closed at $27.49. So very close to this number. Clearly, investors were driving down the share price to get to this number that the company is offering the shares at. We can also see that the gross proceeds from all of this will come out to that $1.5 billion. But again, keep in mind, the company could offer an additional 8.1, almost 8.2 million shares. And all of this is expected to close on December 8th. So here in just a couple of days, this transaction will close, and then we'll see what SoFi's share price actually does coming out of this stock sale. So those are the straightforward numbers that we could see from the press release directly from the company. And obviously investors, again, were pushing down the stock price to what the company was offering their shares at. But something to keep in mind is the company could have structured this deal when the share price was trading around $27.50. And what has happened since then is the stock has kind of leveled off around that $29 to $30 mark. What that means is investors, at least before this offering, were valuing the company higher than where SoFi Technologies was actually valuing the stock. And basically what I'm getting at is the shares may have fallen further than they should have after the announcement of this stock sale. And the way we can calculate that, or really justify that, is based off some math. So first off, we have the shares outstanding that were announced in their most recent earnings announcement. That is 1.2 billion shares outstanding. And before the drop, the stock was trading at a price of $29.60. That gives SoFi a market cap of 35.6, almost $35.7 billion. And from there, we know the company is selling 54.5 million shares at a proceeds of about $1.5 billion. What we can do is we can divide 1.5 by this 35 billion, and that gives us an impact of 4.21%. What this 4.21% is telling us is how much dilution is actually occurring. So what we are seeing is about a 4.21% increase in total shares outstanding, which again is a decrease in your ownership of the company if you hold shares of SoFi. What we also need to keep in mind is there's the potential sale of an additional 8.1, almost 8.2 million shares. That comes out to about $225 million in sales. And that is an additional dilution, which would take the total impact or total dilution to about 4.84%. What that means is if we consider 4.84% dilution from this original share price of $29.60, we should have actually seen SoFi's share price go to around $28.17. So basically what I am getting at is if this $29.60 was actually a fair value for SoFi's stock, and that's what investors believed before this dilution took place, then what we should see over probably the coming week, maybe 2 weeks, is a return to a share price of an equivalent, which would be around $28.17. To break that down even a little bit more, that means there's about a 2.44% upside from the current share price to return back to fair value before the sale was announced. If you're a short-term trader, then all of that may have mattered to you, but if you care about the long term, really it doesn't matter about these short-term fluctuations that we are seeing in SoFi's stock price. What really matters is what is SoFi planning to do with this additional cash? And they kind of spell this out in very vague terms in the announcement. And that is they are going to enhance their capital position, increase optionality, and enable further efficiency of capital management, as well as funding incremental growth and business opportunities. I'm not going to pretend to sit here and know exactly what that means. At the end of the day, that's a bunch of corporate jargon of really what they plan to do with this money. Ultimately, as a shareholder, what I want to see is SoFi focus on growth. And I have a lot of faith in their CEO, Anthony Noto, doing just that. What we have seen in 2025 is actually a reacceleration of growth, which has been very exciting. And I think this is actually prepping for 26. I think 26 is a year that Anthony Noto is making changes to the business again to make sure that they are positioned for growth. What we have seen for their member count from 2021 till now is massive growth. And this needs to continue in the future if SoFi wants to become the business that they ultimately are focused on becoming over the next few years. And honestly, if you have been holding SoFi stock for at least the past 3 or 4 years, you should have a lot of confidence that the reason that SoFi made this stock sale is for the right reasons. Because what we have seen from Anthony Noto is him constantly pivoting the business at just the right time to capitalize on the right markets. Back in 2020 and 2021, we were seeing him focus on the lending business. But what he was also doing is setting up the company for future years. He was focusing on trying to acquire a bank charter so that he could grow their savings and checking side of their business. And he did just that at all of the right times, because in 2022 and 2023, we saw interest rates increase, and this had a huge impact on the business. Them having these savings and checkings accounts made all the difference through those tough years on the banking industry. And you can even see in his numbers how he pivoted at the end of 2023 and 2024 to focus on profitability. We could see that margins increased significantly. He went from 18% EBITDA margin to 30% in Q4 of 2023, and then maintained somewhere around that 25% throughout 2024. What I think Anthony Noto is likely setting up for in 2026 is a return to focus on the lending business. As we potentially see interest rates fall, I think he is assuming that we are going to see student loan volume increase significantly, as well as mortgages increase significantly. And that's where he probably wants to deploy this capital. So ultimately, if you hold SoFi shares because you think the company is going to be a profit machine in the next 1 to 2 years, I do not think that is going to be the case. I think what Anthony Noto is setting up for in 2026 and likely into 2027 is to refocus on growth. And how this should materialize is higher top line revenue numbers and continuing top line growth that is very strong. I would guess somewhere around 30%, maybe even 35 or 40%. And what this will ultimately lead to is probably less focus on the bottom line. And that means that earnings per share could suffer over the next 1 to 2 years. I don't think it is going to decrease dramatically. I just think it is not going to explode as much as a lot of investors have been anticipating. And here's what analysts are expecting in 2026. So for bottom line numbers, they have an average EPS estimate of 58 cents. The low estimate is 47 cents. The high estimate is 70 cents. Keep in mind that this year, the company is expected to put up a non-GAAP EPS number of 37 cents. In my opinion, I think we could see bottom line numbers in 2026 somewhere around 45 cents. So they might even be a little bit lower than what analysts are expecting. But again, I don't think that is going to be the focus of the business in 2026. I think their top line numbers and increasing member count is going to be where Anthony Noto is focused. And for top line numbers, analysts are currently only expecting 24 to 25% growth. I personally think that we could see SoFi growing their top line by 30 to 35%. So I think analysts right now are a little bit flipped on what the business is going to focus on in 2026. And ultimately, the reason that top line growth is good for a company is because investors believe that in the future, it is going to translate to stronger bottom line growth. And I think SoFi is positioned to do that. But Anthony Noto has a very good eye for understanding where to position the business to best capitalize on growth. And that is what I think he is doing for 2026. And SoFi's focus on growth is the right move to make from a valuation perspective as well. Right now, their forward PE ratio, according to Yahoo Finance, is sitting at a 48.78. This is a premium valuation for a banking company. Obviously, SoFi is a little bit more than a banking company, but what they need to do is maintain higher growth rate numbers to really justify this higher valuation. If we see their growth rate decelerate significantly, we are going to see their valuation drop off significantly as well. But like I mentioned, I do hold shares of SoFi Technologies. This is the YouTube portfolio. Right now, it is sitting at a value of just under $89,000. And year to date, we have put up an impressive return of almost 54%. I'm very proud of what we've done with this portfolio, and I'm actually very excited about 2026 because I think we are well positioned to capitalize on some improvements in the healthcare industry in 2026 that should help boost the returns of this portfolio. But in terms of SoFi, it is currently the sixth largest position in the portfolio. We hold 200 shares at a market value of $5,500. And right now, it is the top gainer in the portfolio, up 366%. And like I mentioned, there's a heavy skew in this portfolio to the healthcare industry. We have Novo Nordisk as our third largest position, United Health Group as our fourth, and our fifth largest is Oscar Health. All of these positions are around $7,500 for market value, and the only one we are currently down on is Novo Nordisk. I think in 2026, all three of these stocks are going to have great years. That's why I've positioned so heavy into all three of them. We also have some notable adds to the portfolio recently. We added Elf Beauty, we're currently up 17%, Reddit, we're up 25%, and Duolingo, we're up 14% already. We just added these positions around a week or two ago, and we are already seeing some nice gains from them. And then we've also added Tempest AI. I made a video on this, and I'm going to make another video on this company because it is very exciting in my opinion. Right now, we are only up 1.5%, but again, this is a very recent add to the portfolio. But again, all of this is just my opinion. Don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Let me know down in the comment section your thoughts on SoFi. Do you think this sell-off is a little bit overblown? What do you think a fair price for SoFi is? And most importantly, what do you think SoFi is going to do with this additional cash? Let me know all of that down below. While you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.